Welcome. Well, we are starting to we're gonna analyze different symbols today as well. Markets weekly analysis. Well, there's not much that can be said about last week, apart from obviously that we had a lot of surprises. The most important one was the non-farm payrolls. Everybody knows that it didn't go as expected. Nobody expected these results for sure. And we had this terrible outcome of the NFP, and therefore, all the currencies, all the symbols, basically that have. Apart from this, not much. As you can see here, I'm going to start with the calendar. I'm going to open the calendar in my. This is what happened right now. This is what's going to happen next week. We've got different things happening. Okay. So basically, what I have here for next week on Tuesday. No, this week, sorry. Today's the 5th. Yep. So, as I understand, we've got tomorrow morning, as the markets open in Asia, things should change over there, because of course those markets were on like all of those movements that we had in the European market and in the American market. We should see how this reflects in the Asian market. We need to take into account that tomorrow is going to be a holiday in Canada, therefore those markets are going to be closed. So we will have only the Asian market, and we will have only Europe moving. So after Europe closes, I guess everything's going to be ranging and not moving much. Towards Tuesday, we've got some important news regarding the Great British Pound. We should see that on Monday, if I'm not mistaken, is around 11:30. It's time depends on your time frame, so that's supposed to be anyway in the morning. Okay. I guess because I've got Europeans crazy in the time frames, but anyway, in the morning we've got those news regarding the Great British Pound that can affect those pairs. And apart from that, we've got, they changed the interest rates. Actually, right now they're 0.25%, and the provision is that I don't think there are going to be any changes. Everything is going to stay the same. What I'm interested in seeing is what happens with all the speeches from the people, from the members of the FOMC, that they're happening on Thursday, and also what I'm also interested as well is of unemployment, because we need to understand that the forecast was, if I'm not mistaken, 700K for yesterday, for the previous week. it was something like happened. I think it was in March or something like this, that we had, or March, April, May. One of these days, one of these months, we had um, a provision of like nearly 1 million, and the numbers were like not even like 300K. So when we're talking about this, we could see at that time that everything related to the dollar just moved so much. Terrible. We only had a movement of $10, so a movement on $10 with such amount of bad news is not as well as I expected. I expected to for sure break the 1830, and it went over there. It never finished. Nowhere near that. So it means that even though the US dollar got weakened, like the market is still uncertain. There is fear, but there's probably too much on what happens next week. Basically, we can understand that the month will go that way. As I said before, normally, after these numbers and after unveiling this problem with the employment, how the stocks will react, if they will plumber or they will continue rising, because we have this situation that even though the indexes is telling all of the indexes, they're telling us that they're in a point of getting weaker and weaker. We have higher highs nearly every day right now. So the drop that may come has to be of massive proportions. Anyway, all of this, again, as I said, I'm not a financial advisor. This is only for educational purpose. This is only an analysis I do as a hobby. So I don't earn anything out of this. It's just something I do for fun, like others, I don't know, play hockey or whatever. Anyway, as you can see, my idea for the gold was completely the end of the week. We would be either above the 30s or below the 1800s, breaking basically either the support or the resistance. On the contrary, we are back where some scenario would move up or the price would go down. We can see that definitely I was not accurate on this. The price was ranging all the time, and every time it tried to go down, it was brought up. Every time the buyers bought, every time it was trying to go up, the sellers took the control. So that's why we can see over here that just the previous days before those non-farm payrolls, in the 4-hour chart, we have in gold this thin, this thin Bollinger Bands. You can see that the price was ranging on a maximum of $10. And the reality is that it changed $15. That from the moment that payrolls appeared, the price that it closed, it's been to $15 at most. So this is nothing. This is nothing for such terrible news as it happened. We should be in the 40s. We should be much higher than where we are right now. Anyway, as you can see, my previous week goals, they were wrong. It didn't even go up or down. It just ranged. So the people who we're just scalping those candles. I guess they got, because we have a fantastic range, kind of a triangle actually. Here, yeah, it got the the price there, you know. I don't know what to say. Like this line, it comes from far. It's a resistance lines from well, the 4-hour time frame. It's from already from the beginning of the middle of August. Okay, so every time that it's trying to surpass it, or it's just, you can see the massive rejection here. It didn't get through. Next time it didn't even pass. So we are not getting through that, but we are between this range right now. We are between this range. I thought that as I drew this is this highest high at that time. It was supposed to be going down from here. The RSI was 74 at that time. Over here, the RSI was 68. Even here, it was 73. So we're never above those 74 and 23. And this time again is 69. So like, this is still a trend line that is dropping, but it's dropping slower than it's supposed to. So anyway, this is a 4-hour chart. We can see that since that drop we had at the beginning of August, we have had an uptrend. Okay. I don't know, because it's interesting with all of this bad news. We can have either right now, if the stocks start plummeting, if the stocks start going down, we might have gold rising. We might have gold as a conservative approach and people buying gold. For this to happen, we need to start getting less greed and more fear. The stocks need to be dropping. The indexes need to start dropping. And well, they haven't so far. So we are in September. We should see this week. It could range. It could perfectly range or drop before going upwards. In my point of view, gold should drop, but right now I don't have much of a real information on why it should drop, apart from the indicators that they're telling that it's supposed to be dropping, but it keeps on rising. Expected in the 1-hour chart, we can see that yes, it broke all the downtrend tendency, but it's still any way you want to see it. We had this triangle before. The 2-hour again. It's over here. These might be a fake out. It's still not higher than the 80 that we have over here. But anyway, we're going up. The daily chart, it's way above any of this right now. So it broke completely our daily downtrend line. It broke it. So we might go up to 1850. We might perfectly. Look at those Bollinger Bands, how wide they are. So being as wide as they are right now, the price can really move around a lot, and there's not really that we can be like saying about it, apart that like the price, you can see like it recovered. The thing is that right now in these 30s, we've had several, like in these last 2 months, we've had several moments of rejection. So if this continues being a strong resistance, we shall see a rejection here as well, and the price should go down. Again, the price is going up in the MACD. You can see that. The stochastic tells us as well that it can be a buy. The RSI can be a buy. So we are still on a way up. On a weekly basis is a bit different. On a weekly basis, we can see that this is a different percent 2019. Okay, and the highest high we have is from August 2020. So we're talking about a triangle, and this week's rejection that was 4 weeks ago or 3 weeks ago, you can see that how that candle, it tried to break downtrend, and the whole candle ended up inside, apart from the shadow, the candle itself ended up inside a triangle. Therefore, we may see that the price might be uptrend. If we break this downtrend line that we have in the RSI, if we break this upwards, we're definitely going up. We're definitely going up. Yes, there's a lot of things to go. With 1860, we need to be breaking this, and therefore we need to be breaking this. If we don't break this trend line, I guess that there might be a rejection around here or a range, and then we are able to actually start going downtrend. You can see that the weighted moving average right now, we are on 1732. 1732, that's actually not that far, and on the top side we're in the 1900s. Okay, so there's a lot of area where the price can be moving in a week. Okay, not much that shall be added regarding this. I think we have, of course, this 1930 resistance, and we have to leave it up to that. Okay, we have it there, it exists. Not much we can say right now. It needs to pass it, and sustainable, like in a way that actually when it passes it, it's not only like just a minor pass and just stays there because next candle will go the other way around. It needs to pass it in a way that it's breaking it, like really breaking it. This way you can really say that, yeah, like it's done it. Okay, so it's like over here we have this price over here, this 1670, 1680, that it's a very strong point as a support right now. Whenever it touches this, it bounces back up. So for this to get through and to go down, it needs to have all of that strength to be able to cross. The same, I think, right now we are in this moment with this 1830. So we need a very strong day. I don't know how it will perform tomorrow. As I said, tomorrow we have Monday and a holiday in the US. So because we have a holiday in the US, we don't know really what can be happening, as maybe the market doesn't have the liquidity, and it doesn't have maybe China and Europe just grows stronger and stronger and uses that day to weaken the dollar, so everything can happen. So apart from this, we've got the euro dollar, and while the euro dollar, as we have here, as I said, we had a triangle, and we were in this point. This is a daily chart, so we were in a point that, as I told you, we were here last week, And when we were here, as I said, normally prices, they return to the line. And I said, if this price crosses this orange line, two things can happen. That normally when it crosses, we have this here. And I drew two possible scenarios for here. So that this week, the euro dollar would drop, like the previous week, well, the week that has already finished. The euro dollar would drop, and in that case, it would be on one down here, you know, and this point over here, 116.71. And the other one was that it would just go up, continue going up. Okay, as you can see, it has gone up. Like actually the candle that I did, this thing that I did. Let's put it this way. So now probably either this week continues going up, or it should go down a little, probably to bounce on this area again. There's 118.21, 118.22, 118, around consolidation on this movement. We have broken the triangle upwards right now, so it can perfectly mean, as the arrow that I drew, that it can go either this way, you know, if it continues just going up, it can go completely that way, or we can have things going upwards until maybe we go down later. Okay, it depends on what happens if we are actually able to break this 119.90. Okay, this 119.81, 119.90. This area is a strong resistance area from my point of view, and to break it, it needs to be like strong candles, you know, long candles that are able to show us this strength to be able to break this resistance that we have. If not, right now you can see that it touched, as soon as it touched this 119, it started dropping again downwards. On this happened on Friday, so it's Friday. Yeah, it went all the way up, and then it didn't end up that actually that high. Okay, so the last hours it was not that strong, but again, all of this, you can see that we have also a triangle, that this is uptrend over here, is downtrend from a longer perspective. Okay, from July. Okay, so we are in a moment that if we break this uptrend, probably will be breaking also this area around here. Okay, so it gets a bit weaker, and this should go down again. This RSI should go down again to go and bounce up again. So that's why I say that I think there might be a correction to around 118.40, something like this, 118.30, and from here it will try to go back up during the month, because probably the stocks in the USA, as I said, probably they will retrace a bit. It will show some weakness, and then the euro might show some strength against the dollar. It will go back then, but it will not be able to surpass this 118.90. Okay, all of these again is only analysis, guys. There's a lot of factors that can affect. We have different things that can happen, as always, you know. This scenario is completely forgotten right now. We are over here, either we go all the way up, or we have the correction and then we go down later. Okay, by always hitting the top of this. So we go down now to go up again, to go down again, to go up again, to definitely break downwards. Okay, in this trend line. Okay, that's my point of view of what will happen, because the US dollar cannot be weak so much in time. The inflation is going to start getting high for them. too high from my point of view, and they will start to try to get this US dollar stronger. Therefore, also the euro should, the interests are not going to, they're going to continue being in negative for the euro. The dollar has these 0.25, but uh, they need to, it's not about moving the interest rates, but also stop putting so much money in the economy. That is what right now is bringing this dollar down. So whenever they stop all of this printer thing that they've got going on, probably the dollar should start stabilizing, hopefully, and not collapsing, unless China starts selling all the dollars they've got. Anyway, yeah, apart from all the jokes. Well, let's see what else we've got. We've got the pound dollar. Downtrend tendency. That's an interesting thing. I would prefer to see what happens over here. I would not consider it really as a breaking of this trend line that I have drawn, as I would like to see in the future if actually this Great British Pound versus the dollar is able to go above those Bollinger Bands. I would not call it a buy completely until I see it with 1-2 candles really like going upwards, above those Bollinger Bands, because right now it can perfectly just touch and start again ranging and dropping. Okay, so that's 200 that it's gone up. Okay, but still it can again just be another range move that we can maybe see between this channel here, that it did it before. So okay, so it can perfectly do it again and range here, get around, probably around here, and then range back or range down. Okay, so don't get too excited on the pound going to a 43 or 44 or 42, because this probably ain't happening. Apart from this, let's see what else we've got. Well, about the Dow Jones. Well, I was talking about this the other day with some friends. I see this as a very, very delicate moment for the US. This is the Dow Jones. I don't see how this can sustain itself. I just don't see it. Like it's we've got, as we said, high highs all the time. But we are right now in a little moment that we can call it as a bit of a freaky situation. Let's put it this way, if you want. So we might be on on a kind of, and the SP 500 and all of these ones. I drew the SP 500 for like actually November last year, or September, October last year, I think, and it's actually met most of the points that I actually wanted for it to meet. You see, it had to hit 4,500, but right now I did all of these drawings in August last year. Okay, August last year, which means that actually, like, things have been going all the way up there, and you can see that drawing from this moment, from the 10th of January, we are still all the time going down and up, down and up, down and up. Okay, and there's no way There's no way this can continue being just going this way. I'm afraid to say so, guys. It's like it's not natural. We can see in the MACD how something it's it's not going right over here. For nearly a year, if we're on a weekly basis, you can see how all of this has been just going up all the time. This has broken. It broke already in February, but it still continues being there. And if we put it on something I do sometimes, okay, you put this in on a perspective from the stochastic, that it continues being a buy even though it shouldn't. It's not natural. It's it's a situation that I'm afraid of where we will go. Like, the thing is that you can see that even though this is going up here, I'm not talking about right now, okay, guys, but what I mean is that I see a drop back to around here. Okay, I see a drop happening at a certain point from here. That's 600 points. Okay, that's a lot, but it needs to go back probably to a point where it was around here, that we had some moments. It took actually several weeks to get across this. You can see he tried it went down, back up, tried, maybe, yeah, and then it went back, and this was a support. Okay, so that's what I mean. Like, I think that it may, at a certain point, and I don't think it will be very far, but this may start going down. And every time we're going over here, this is the 18, okay, but if we take this example, and I'm not touching it, you can see that the moment when this dropped, it was exactly the same. It drops, okay, guys, and we're talking about there's no correction, guys. There's no correction. Like, the good thing of this is that you can see it goes down. That's the great use of the Bollinger Bands. Okay, you can see that it touches one side, then it goes down here, then it's okay, we're going back down, up, then down, then okay, we go back up, we go back. We have always some kind of moment. Well, over here this is different, okay, but from here, from the March last year, the closest it has gotten, because of course the Bollinger Bands opened a lot. Okay, let's put it this way, they opened a lot, but we're talking about massive numbers right now of only going upwards. So only for this year, for you guys to understand, 4th of January, I'll try to put it from here. 4th of January is here. So we're talking that for this year, we are in a 22%, guys. That's a 22% rise for this year. That's insane. That's a lot. These numbers are not normal. From January, if I understand right, September, where is January? January, the 4th of January. So it's from here to here. 800 points. Nearly 900 points. Nearly 900 points. Finished. We've got September, October, November, and December. That's why, an index that gives you 29%, 25% per year, that's a lot. If we go over here and we go back, I don't know, let's see, what is this? Here, 31st, here, 1st January till December. Let's see. Whoa. the S&P 500. There you go. No, that's the first. See, that's again. We're talking about large numbers, guys. Very large numbers. Very large numbers. Of course, then you can go another different year. 25, 22nd, 1st of January. This year was the opposite. This year was the opposite, as you can see. Okay, it was -7. Okay, the balance for 100 years is that it rises at 10% yearly. Okay, of course it needs to like balance that. If one year you're losing 7%, the other one, you might be winning 15, or something. But we're talking about that the previous year, not only it went from here, previous year with the coronavirus, it went from here, until here. So it was also an 18% with the crisis. So that's why what I mean is that it doesn't look natural to me. Anyway, I think the crash we had with the coronavirus was a virus, because if not, it would have continued going up. And like probably the Bollinger Bands would not have extended so much, so the Bollinger Bands would not have been, and we would not have all the money in the market that we have right now. Therefore, as not for having all of these bonuses and treasuries and bonds and everything that we have right now in the market, we would not have this impact in the economy. It would have probably been slower. It would have kept on growing, but not that much, and not at this speed for sure, because there's nothing like that says like why we need this massive rise. That why is it rising so much? Anyway, if we go to the Nasdaq, we've got exactly the same situation. Okay, the Nasdaq was supposed to touch the 15,500. You saw that I showed it before. 15,500. 15,500. That's what my expectations were when I did it in August last year. Well, it definitely has done it, but again, look at the index in the previous years. This growth is not normal. This growth is not normal at all. Like we need a moment. Look at even in the monthly chart, look at these Bollinger Bands, guys. We're talking about half of this. It's like we are in the 16,000, and we're talking about the other one being 8,000. That's a math. No, sorry, my bad. Okay, we go to our famous DAX that everybody loves. The DAX is approaching its target that I use sometimes. One moment, I think I had to restart the computer before I did this. The Bollinger Bands are closing. As I told you, like we are in a moment of 700s. If we go to the daily, we're also downtrend, but it's still going up. So right now it's ranging. It still hasn't broken completely. It's touched it, but it hasn't broken completely this. And for sure, it's not below our weighted moving average of 150 periods. I wouldn't be surprised if it just continues just ranging a bit. Maybe it spikes later before the end of the year to touch, and then it goes back down to the line that is supposed to be ranging between. Okay, which is between this dotted lines and this ones. If we check, because it should range between those prices. Okay, that's just the continuation of these lines. So the continuation of these lines is, if we remove all of this, is all of this over here. From here goes that way without this intervention. So that's why I said that it could. Again, Bollinger Bands, these ones are way thinner even in the monthly chart, they're way thinner than the ones in the. Did you see? These are only 6,000 points, guys. 6,000 points. It's not even like the other one is half. You know, it's like if it's 16, these should be 8,000, and right now we don't have 8,000 as a difference. Okay, so this one is still not as terrible as the other ones, but yes, a correction is needed. Anyway, guys, thanks for listening. Feel free to join us on at We Love Gold member, also at Minoristas for the Spanish speakers. Join us to talk about manual trading. We trade ourselves, we help people, and we do some of these streamings. Some of these other days you will have other people streaming, and not only me. Anyway, guys, hope you have fun. Yeah, charts are amazing. Whoa. Anyway, take good care and have a great week.